Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. That is Fat Man Zoom. The stock market is crazy and chaotic. We made it our mission to help you guys own it, and it is a little bit brighter of a day today, but is it for real or is it not? Fat Man Zoom will answer that question. But before we get into that, why don't you hit everybody up with a starting five?
Starting five, we got Zane Khan, Ralph Vandenhoek, Jeff Panika, The Bongo Fish, Savvy Money Show. You guys are our starting five. Welcome to Own the Chaos. Stock Market Live is today, and it's every Monday through Thursday. This is our last one for this week. We're talking about the headlines, certainly still stuff to talk about. Ford had some news. We have some airline news. Hindenburg's back in the conversation, as well as just the general overall market.
Yeah.
So we want to talk about mainly tech. Make sure you stick around. We're going to talk about that a little bit towards the end. On tech, have we found the bottom? Is now the time to buy tech? I didn't even look at what your title was today, but it looks like, is the tech stock crash over? Dun, dun, dun. And we got a major announcement, which since this is more related to the Chaos Crew, we can start early in it. But first, I just want to knock out a couple of comments, just see what you guys are chatting about in here.
The Bongo Fish was very happy that you said their name, his or her name.
Oh, I just want to hear Fat Man Zoom say Bongo Fish. That's a good name. Savvy Money Show picked up some Amazon and Foot Locker. What's up, Jonathan Schreiber? Grab some XFL. A couple people bought XLF, sorry. XLF. Oliver Thorpe, appreciate the email, brother. It was very thoughtful.
Yeah, it was great.
In the house. We got a lot of people who bought Google. So we certainly got people scooping up tech. It sounds like you guys have your thought process behind that. And Jonathan Schreiber, I think you're going to be really interested in our conversation today. You are going to buy some Penn in late February, preparation for March Madness. That's interesting.
Yeah.
But good luck with that. I talked about how I'm huge in Penn. And I want to just start there. Chaos Crew. Barstool Sports is opening. What did you say? I'm just going to say Dave Portnoy. Dave Portnoy is opening the first Barstool Sports bar in Chicago. Private opening tomorrow. Public opening, grand opening on Saturday. Guys, I just booked a flight. I'm getting in. Come hell or high water. I'm getting in to Friday's private party, and I'm going to crash this party. And I feel like, Brad, everything I've done over the past few years has actually led me to this point. I'm going to go up in there like Leo DiCaprio, and I'm going to be like, I'm not fucking leaving.
So just to give everybody perspective here, Fat Man Zoom is a professional party crasher.
Yeah.
He's crashed various weddings, and that's rookie stuff. But he's also crashed the very last Lin-Manuel Miranda showing of Hamilton in Puerto Rico on a whim, just up and went there, and then also entered into their VIP party. And that was probably one of the most incredible stories. This could top that.
This could. It feels very similar to it because it was the day before. It was just kind of out of the blue. But I told you, man, last night I was watching an interview with Eddie Barstool on the Dave Portnoy show where he interviews Dave Portnoy.
Yeah.
And he does a really good job, by the way. He's a really good interviewer. But he just basically is running down topics as far as it's concerned with Barstool, as far as it's concerned with Dave Portnoy. And one of the conversations was this sports bar, which honestly, man, I had no idea. I don't know how we missed this. But they're planning to open a sports bar in Chicago, in River North, if you're familiar with Chicago. And then the next one is going to be in Philly, which should be by the end of the month, or at the latest, I anticipate by February, the end of February.
Yeah. I guess probably the question that a lot of folks might be asking too is like, what's the purpose behind doing this? Why are we doing it? Why are we going to Chicago and crashing some parties?
All right, this is my shitty webcam. Brad's loading back up. Can you guys hear me? Sartorius Anatolis. Did I say that right? I think I just fucking nailed it. Okay, cool. Bro, the man's trying to shut me down.
All right, we're back. There we are. You're back.
Yeah, the man's trying to shut me down. I do agree that I think somebody's in Barstool or Penn's trying to shut it down, but you're not gonna stop me. But here's the thing. Back to what we were talking about. I don't want to get too much into it because I feel like it's going to turn a long conversation. The bottom line is I'm going to be going to Chicago, representing On the Chaos. So guys, stay tuned to the channel. I'll be keeping you guys updated and I'll let you know what I need from you. But anybody on Twitter, follow me on Twitter at FatmanZoom. I'll also put something on YouTube and I'm going to document on both platforms. I haven't really worked through all of it, but guys, this is going to be epic. It's going to be epic. And I feel really strongly that I'll find a way to get my ass in that party. And I have other predictions I think could happen, but I don't want to jinx them, but I'm excited. So here we go.
I'm pumped for it too, man. Cause like if there's anybody that's going to be able to pull this off, I feel like it's you.
I hope so. I mean, I have a sound strategy. We talked about the play-by-play. But listen, it's happening. I'm not coming out of this until I land back in Baltimore. I'm staying in this outfit for 3 days. I don't care. I'm just posting up and I'm going to do whatever I can. Kick me out, arrest me, whatever you need to do. I'm telling you people, you don't understand. I will do what it takes to get in, even if I have to freaking Tom Cruise Mission Impossible, climb the building and rappel into the party.
I'll come bail you out.
All right. I appreciate it.
Me and Don will come bail you out. I see Don in here.
Well, I mean, Mike Hudson's probably the easiest one
probably
to bail me out.
We do have friends in Chicago. So
yeah. So definitely stay tuned. It's going to be, I think it's going to be really fun. And so that's going to happen. But yes, I just want to let Penn know I'm in for it. I'm in for it. I mean, it really Barstool. I would say Penn, but it's Barstool. I'm in for it. I'm riding with you guys. Dave Portnoy, here we go.
I love it. I love it. So there you have it. Again, go follow him at FatmanZoom. You can follow me at Own the Chaos as well. I'll be retweeting all that jazz as well. Who says all that jazz?
Yeah, I don't know. But
I need to take that back.
We got a couple good headlines to go over today. Let's start with our dear old friends Hidden and Turd.
Yes,
they're back in the commentary. What happened with them?
Yeah, so Hindenburg Research. If you guys haven't heard from them, they're a company that just basically goes out and tries to short companies. Their platform, they basically provide a lot of research for anybody who's interested in shorting. stocks. They got smoked on quite a few of them, but they've done actually really well too. I wouldn't say they do terrible research. I think some of their choices are suspect, and this is one of them. So Hindenburg comes out and basically says that they are short. They have a short position on Royal Caribbean, which, by the way, I have not been a fan of the cruises. So like this isn't something that I'm super against. I just don't understand. So they come in and say Royal Caribbean now has over 26 billion liabilities. And I'm going to go and share the screen here real quick so you guys can read it because I retweeted it out as well. Real quick, I'll share the screens. Let's do that. All right. So as you can see, they basically came out and said now has over 26 billion in liabilities, 17 in net debt, which will be extremely difficult to service, almost necessitating extensive dilution or existing shareholders. You literally could have picked any of the cruise liners and really came to that conclusion. I believe Carnival Cruise has debt that is actually much higher than their actual market cap, which is pretty wild. And it's over $20 billion as well. Royal Caribbean continues to burn through cash much more, or I'm sorry, Carnival Cruise Line continues to burn through much more cash than Royal Caribbean. Out of the three, I would say that Royal Caribbean actually has the best balance sheet. And if there was one that I was going to be going to short Fat Man Zoom, it probably would be Carnival.
Yeah, that makes sense. I don't know. I mean, I hate this company. I think I hate everything that they're about. I don't even know how they're allowed to do this type of stuff. Not saying that they don't come out with legitimate stuff, but like it's just manipulation in my mind, and I think it's just kind of shitty because it feels like it's lazy.
Why does it feel like it's lazy?
Well, to your point, like they could have broken down the entire industry. They could have broken down the one with the strongest bear case, but it feels like rather than doing, really digging in, they just focus on one little key and like expose that one little key piece. And it also feels like it's like personal. It feels like who they pick there's some level of like personal vendetta there.
I'll definitely agree with that. I think that it does feel personal at times, the way that they kind of like do the write-up. But I will say, and I'm just going to play devil's advocate here, I will say that I feel like it's nobody likes to play the unders. Like nobody likes the unders, right? The unders club is not a cool place to be. Everybody likes the overs club. So obviously they have that going for them where most people aren't really going in for shorts. But what I will say is that what Hindenburg does as far as their short reports are concerned, it's not so much different than at least in my opinion, not so much different than when like Jim Cramer's on Mad Money talking about how he feels really strongly about this. He's got millions of people watching him, right? Like, so it has the same influence.
Yeah.
It's just to the upside rather than shorting it.
Yeah, I agree. I mean, I agree with that. And, you think about all the big players and how they have the ability to like move a ticker. Yeah. And yeah, I mean, Jim Cramer, whether you like him or not, he does his work. Like he does his homework. Yeah. He's knowledgeable as hell. He also has the experience. And so, I mean, yeah, I agree. That's not dissimilar. And to your point about Royal Caribbean, it's not like an unfair point like they've done historically with some companies. And I mean, didn't they expose Nikola?
They did. Yeah, it was Nikola and Clover. They obviously went after.
No, not who they went after, but didn't they expose Nikola?
Yes.
Because Clover was BS. Yeah. And I'll go to my grave in that, and you can look into it. It was BS. So I don't want to convolute those things.
Right.
That's my problem is like, Nikola's great. Do that. You're giving us information that's really helpful to present. And even this, you can present that. It makes sense. I just don't like them in general because I don't like their approach to doing it. It seems relatively biased and it seems personal in general.
Yeah.
If you would keep it on the up and up, like Nikola, there's a place for that. You're calling out companies that are doing us a disservice and they're basically, essentially, that's what I'm looking for. They're essentially like playing us.
Yeah.
But it feels like what they do is they just throw a bunch of shit against the wall and they hope some of it sticks. So if they were all like they handled Nikola and that was sort of their MO was like exposing those people, like I'm down with that.
Right.
Do that with Robinhood. Do that with Nikola. Do that with whoever. But the problem is that that's not how they go about doing their business all the time.
I would agree. I would agree with that.
The other topic, one stock that has done really well, which is Ford. Ford continues to roll, got an upgrade by Argus, a price target upgrade to $29 a share, citing strengthening balance sheet stuff we talked about, strengthening balance sheet, demand, easing of supply chain, and semi-chip issues.
Yeah, huge bounce, and you know that I'm happy about this. It got really close to what was it, $25 a share yesterday? Let's go back out to the daily chart. So it got really close, and then obviously Uncle Jay came out and kind of like shit on the whole party. You can see here on the daily, they got it to $24.95, and then obviously came back down. Actually, still ended the day slightly red yesterday. Opened up today in the red, but obviously had a huge bounce. We come back to the 5-minute, and it's starting to threaten that $24.95 area as we get into the close. We had about 13 minutes left. I don't think we see those highs. I could be wrong, but we could see maybe a flurry of volume coming in. But either way, I'm super pumped about this. You guys know that I am basically on house money here. One of my largest trades ever that I've made on Ford calls, and this is great. I'm loving this. You can keep the price target increases coming in.
Shout out to Don Francho. He's actually in the chat right now. He has been a great support in education in educating us in options. And so him and I were having a conversation, and like one of the things I did with Ford, because I have an account dedicated solely to wheel strategy with Ford. And I actually rolled over some contracts that would have actually called away my leaps. So I had contracts in that. And so I pushed that out a week, and that was cool to learn because I've heard about rolling it over, but like rolling over contracts, but I didn't really understand the risk reward. Like that's the one thing. If I don't understand the risk, because there's innately a risk in every single move you make, then I'm like hesitant to do anything. But we sort of talked through the pros and cons of it, and why you would do it, and what's sort of the upside and the downside. Felt really good about it, and I feel really good about it. And then I went to actually my other account and did the same with a couple other positions that I was running the wheel on that could potentially get assigned, or sorry, not assigned, get called away. Somebody asked me regarding Penn. Housekeeping, what's your price projection of Penn or exit plan? I'm in with you in the red. My exit strategy for Penn, it's interesting because my exit strategy is essentially going to be, well, first off, I'm not leaving it this year unless shares get called away. And at which point I'll probably get back into it. So I'm riding through Penn at the end of the year, and I'll be reevaluating this. But I am trying to run options against it just to collect premiums and stuff. So that's largely like a huge difference between my strategy this year as opposed to previous years. I started getting into it towards the end of the year, but really like making money off the positions I'm in currently. I don't think I'll get out of Penn before $100.
I won't. I have Penn Leaps at 65. And obviously those are red right now, considering the stock's down to 47, but I have no desire to sell those at all. And if by some chance they do really well and I get close to expiration, I'm just going to roll them up.
Yeah, I'm riding and dying with Penn. And this was before this whole weekend thing. I talked to you about this. I even said it on the live stream. I am so bullish on Penn. I'm going all in on my due diligence. I'm going to freaking watch every Dave Portnoy interview. I'm going to immerse myself into their earnings, which I already already do. I know a lot about Penn, but I want to know more than anybody knows about them. Like that's how much time and effort I'm going to put into it, because so far everything we've learned about them, this stock is ridiculously undervalued, and I am really bullish on this stock. I'm willing to make my bet on Penn.
Yeah, market cap's at $8 billion.
It's crazy.
$8 billion is the market cap.
It's wild.
Unbelievable.
And you still got to remember, and this is definitely bias. I want to be clear, guys. I am aware this is bias.
Yeah.
I don't care about technicals. I don't care about anything. I'm looking at this. I'm treating this as I'm an investor in a company. I believe in it. And outside of the stock market, when you invest in a company, you give that money and it doesn't come back to you until you're, until years down the road. So like, you don't say, hey, your company sales went down 10%. Let me get out. No, I'm in this and I'm going to be adding and I'm going to be loading up. It's going to be silly how deep I am in this company.
Yeah.
Or how deep I will be in this company. So forget everything. Forget the channel. I don't care what anybody says. You're not getting me off Penn. Even if it's at $10, I'm going to be adding to Penn.
Okay.
I'm going to go on my grave. This clip is going to be either like the greatest clip ever for Fat Man Zoom, or it's going to be on my freaking tombstone. This is the moment where Fat Man Zoom died.
If you get murdered. I see a couple people just commenting on Penn National and the gaming industry. Anyway, this comment actually kind of caught my eye a little bit. Tim in Michigan says too much competition in the gambling business. I don't think so. Not yet. It's the gambling business in general is just getting started. So even if you're not big on Penn, I think that it makes sense to be big on the industry itself. We still have half the country that is yet to be legalized.
Yeah.
They're projecting this to be $1 trillion business within the next 5 years, 5 to 10 years. And we're already seeing just how big it's becoming. I mean, we just talked about Pat McAfee show yesterday and the amount of money that FanDuel has dumped into them. And so I think that there's definitely a huge opportunity. And right now we're in the middle of a land grab and there's still a lot of real estate out there.
So the statement is there's too much competition in the gambling business, which, when we look at stocks, when we look for stocks and opportunities, we look at sort of whatever we think the thesis is behind on why the stock is moving in either direction.
Yeah.
And Penn is arguably the picture perfect situation. We look for stocks that are fundamentally not the issue. It's other things. And typically it's something in the media.
Yeah.
So a lot of this is, and I had actually responded to your text, but I realized I didn't send it. You sent me the tweet from Pompliano, which talked about the opportunity within New York, and New York's about to go live. That's when a lot of this started, was when Penn didn't get the license for New York, which we actually argued that would be a good thing for them because of the ridiculous cut that New York is taking.
The taxes are ridiculous.
It's insane. I'm actually curious if you think eventually if Penn could get in, because it seems like over time, Penn will have an opportunity to get into New York if they so choose, but they didn't get in. That happened. Dave Portnoy had a hit piece on him.
COVID happened. At the end of the day, I think it was just COVID in general that really killed the casino markets for the last part of the year. Omicron came in, Delta came in, and it just kind of wreaked havoc over all of them because of the various restrictions and that sort of thing.
Yeah.
That's what killed most of these stocks. And then COVID in Macau with the other casinos as well. So I think that's what's just been so rough. I mean, we mentioned the Arizona Bowl got canceled. So like there's a lot of opportunities for revenue to come in, and COVID just kind of like shit all over it. So I think this year could be the year for this industry in general, as long as these crazy ass variants stay away.
Yeah. I mean, I don't think that's the case, because if all of them went down, great. But MGM was up 45% last year.
That was one of the few, though. We look at
but that's our competition, not Wynn. Wynn's not Penn's competition.
But Caesars,
maybe. I mean, MGM is the most likely, right? And then if you talk about sports betting, you talk about DraftKings,
FanDuel,
and DraftKings certainly did not perform well. But Penn. You can't tell me that if Barstool wasn't a part of Penn, that Penn would have had the same move down. I think a lot of this is the negative news that surrounds Dave Portnoy and the reputation around Barstool.
Yeah, it's a double-edged sword.
And he talked about this yesterday. He actually called out Iowa. Was it Iowa? The team that was supposed to be, I could be wrong, Boise State. Actually, I think it was Boise State. Was supposed to play in the Arizona Bowl, which Barstool is partners of. Bro, he laid out the picture of why he thought they pulled out because of him, because of Barstool, and because specifically of him. Like, he was like, painting that picture.
Really?
And that's the bad you take with the good.
Yeah.
Because as a CEO, you cringe because you're like, bro, I know you believe that, and I know it's probably true, but shut up. Like, don't say anything, right? But that's also why he has people loyal to him, because he's just real.
Yeah.
And so over time, that will play out. But the point of what I was trying to make was those, like, regardless of the general like market, when you look at Penn, a lot of it, if it truly has to do with Barstool and Penn, that's not going to last. Like, if it has to do with him not getting in New York, to your point, there's a ton more markets that it could get into.
Yeah.
So there's nothing fundamental that this should be down. He also mentioned, and as the last point I'll make, he reminded us, Dave Portnoy did in his interview yesterday, they still have not spent money marketing or advertising still. So if you want to talk about competition, if you ask DraftKings, if you ask MGM, whoever, if you say, would you rather spend a shit ton of money and like have a higher handle, or be profitable, or have the potential to be profitable and not have yet spent $1 of advertising? There's no doubt they would say, I definitely would be able to, I'd want to be in fourth place with yet spending $0 in advertising and grow. You got to remember, like, that is going to come to fruition. So the example I'll give you, the analogy is, how much did FanDuel just pay for Pat McAfee show?
$30 million over 3 years.
4 years. It was a $120 million deal.
Yeah.
Do you by any chance remember how much Penn paid for their stake in Barstool? I'm putting you on the spot.
I want to say it's 50 million.
163 million.
Okay. So then it's 50%. So they have the opportunity of
to get to 50%. So they had 36%.
Yeah.
Bro,
that's still ridiculous. That's stupid cheap.
FanDuel got Pat McAfee show, and that's a 4-year deal. They don't own anything.
Right.
They just have the right to promote or advertise. Penn owns part of Barstool, and they will next year, at the beginning of next year, they will have a controlling stake in the company. If you don't think they're going to exercise that remaining 14%, you're smoking crack.
Yeah.
They're going to have 50% of that company, and it's going to amount to like $200 to $220 million. You telling me that investment isn't head and shoulders? It's not even in the same arena as FanDuel. And you know what? That is now what the market's at. So FanDuel in 4 years, and I'm taking this from their conversation, this isn't my thought. In 4 years, the negotiations started 120 million. And so FanDuel's going to have to pay more for them.
Yeah.
And then every other creator that thinks they're on that level is going to get paid for that. Penn owns Barstool now through forever, and they don't have to pay another dollar.
Right.
So forget about competition. Financially, this will be the best investment they've ever made, in my opinion.
There's also There's also the score that we don't talk enough about too.
Yeah, in Canada.
And so, yeah, I mean, I agree. Like, this is just the best.
And they're growing. Their casinos are growing.
Yeah.
You know, there's so many factors.
Yeah. And then their biggest regional casino in the country. So yeah, there's a lot to love here. And with the market cap at $8 billion, that's just insane. So
it's silly. Let me ask you a real quick question. If they're not spending money on advertising, they're clearly spending money because they may do acquisitions. Do you think there's a likelihood that it gets so cheap that they would do something like a share buyback or something to get money back in the investors' pockets? Or do you think they just ride it out and just continue to roll with investments and push to, like?
I think they move to the M&A. Like, they have CapEx, a little bit of CapEx. I'd have to go back and look at their balance sheet to see how much cash they have on hand. But I would imagine that investors, especially one like me, and I'm sure you would too, would rather than put money into acquisitions rather than just buying back. So I think that's the route that they would go if they choose to do so. And
their I don't want to say acquisition strategy, but their general omni-channel strategy, and we should dig into like the bar idea.
Yeah.
The idea like is brand visibility and things like that. They're owning these bars. Now they own the sports bar that people are going to hang out in. And it's genius how they're executing it. Because yeah, you're not going to get people sports betting on site, but now you're entering into the market with these sports bars.
Right.
And so when they legalize sports betting, which eventually every single state will have legalized sports betting, now you have this built-in community and this built-in sort of recognition that will lead you to execute easier. And so I think this is like, well, Penn could put a casino in a place, which would be fine. But like, again, some places don't allow gambling. Sports bar, boom. Awesome. Now we have our freaking demographic sitting in a seat having beers. This is awesome. So this is right in the wheelhouse of Dave Portnoy. You're going to see him in these spots. You're going to see him building relationships. And I think that it just, again, every time they make a move, it's clear. FanDuel, pay Pat McAfee $120 million. You're playing checkers. Penn, we'll just buy Barstool. They're playing chess.
Yeah. Yeah.
Sorry, guys. Let's talk about the market.
That was an incredible rant, by
Thanks, man. I appreciate it.
By Fat Man Zoom.
So before we get into the main topic, why don't you just talk about market is now closed?
Yeah.
What do we see?
Market is now closed, and overall, the S&P closed pretty much flat, down 0.1%, so nothing crazy going on there. The NASDAQ also the same thing, down 0.1%. It's good for 19 points. The Dow is probably the bigger story here. It's actually down 170 after having a pretty decent start to the year already. Oil popped over $80 a share. It's now sitting at 79.46. So I obviously am really happy about that as an investor in Marathon Oil. Really, the big story here is, and the topic of today's live stream, it comes down to is tech bottomed? Have we seen a bottom in tech? And I'm looking at the 10-year yield today, and it obviously spiked up some more. We saw this hit almost around 175, as highs of 1744, and this is going to continue to be the theme. Fat Man Zoom and crew, with interest rates. I don't know why the camera's off today, but interest rates are going to continue to go up as people continue to fear the Fed being hawkish. But this is an interesting thing. I'm seeing more and more people talk about this. The Fed isn't going to do exactly what they did in 2018. If you guys recall, the Fed raised rates 4 times in 2018. I put this out on my most recent video about, the outlook for 2022. So there are some concerns here, but I think, at the end of the day, it's probably not going to matter what we think. The market's going to do what it's going to do. I do think that some of the overvalued tech, the high multiple type tech, is still going to suffer. But there may be some opportunities here for me personally, and I took advantage of that today. And again, I'm not trying to time this market, but I think that, what I bought has come down enough to where I say this is a reasonable area to buy.
Yeah.
But the high quality tech that actually makes money, doesn't have to worry about taking out loans to continue to keep growing. Like, there's no way that I want anything to do with Uber right now. Like, those are the type of stocks that I would probably stay away from. But the good quality tech stocks, large apps, I mean, Microsoft's come down 10%. I think that's coming to reasonable levels, especially from a PE perspective too. Apple obviously has come down quite a bit. I think Apple has a little bit more room to come down. But I think that there's opportunity here, and it makes sense to maybe just start nibbling here and there on some good quality tech stocks, and maybe even some of the old tech as well.
Yeah, and it goes back to the having a strategy, having before you get in, when you get out, exit plan, and scaling. I mean, these type of markets are the perfect opportunity for scaling in and scaling out. So
yeah, and so in this environment, we've been talking about this. What do we go after? And, I've mentioned that I'm in quite a bit of value. Obviously, Ford's been my big winner as of late, but I got Marathon Oil, and that's crushing it right now. 52-week highs that it hit again. And so recently, I got myself into healthcare. I got United Healthcare, which obviously had a bad day today, but I still feel good about that. Into the banks as well. Bank of America had a really nice bounce back day. Most of those value stocks that went down yesterday kind of just got pulled down with the rest of the market and gave us opportunities. So I still think that value is where to be, but tech is definitely got a place as well. But you just got to make sure you're getting in the right type of tech.
Yeah. And Jamie says, well, first off, Sartorius Anatolis. Did I nail that or did I not nail that? Because I had so many problems with that when I first said it yesterday, I think it was. Just let me know that I'm not freaking nailing that name, because I'm pretty sure I am. But Jamie says, I'm fairly new to stock investing. I knew Fed played a role in the stock price, but recently feels market only looks at Fed announcements. So much to learn myself. I mean, it's really what the dominating headline is. We never really know how the market will respond to things. We can try our best based on history, and there are certain things that you can look at and you can know, okay, when this happens, where do I look? But I think the biggest thing is just being patient, letting things shake out, understanding that like tomorrow is going to be a new day. There's going to be opportunities. I think the biggest key for me right now is I'm not doing anything intraday.
Yeah.
I'm waiting till the market closes. I'm allowing the dust to settle. I'm just looking at what the scene looks like. And so for example, somebody was talking about Zion Khan said Microsoft and Google are 100-day moving averages after a long time. Those are the type of things like, okay, what are we looking for? And if it would happen, this is where it would happen. So I think just taking your time, because there's going to be opportunities. The one promising thing in my mind is it seems like there's a clear line in the sand. Like everything's not red. There's things that are moving that we anticipate moving, and it's playing out like it should. I think where things get really worrisome is when the market reacts all weird and you can't follow the logic.
Yeah.
This seems very logical and makes a lot of sense. And so now it just boils down to, hey, can you do your due diligence? Are you diversified? Are you looking in the right places? And are you ready when tech comes back? Because that's a huge piece to that we saw last year in the reverse way, right?
Yeah.
And even tech did this. Tech did this last year.
Right.
It came back and it came back strong. So just being ready for it. It's kind of what you're alluding to when you talk about opportunities with Microsoft, and you said you got into Salesforce CRM. So
yeah,
the opportunities are there.
Yeah. So just to comment real quick on Google. Google's stupid cheap. It was cheap before it actually pulled back. Their forward PE is at 25.
Wow.
Yeah.
Wow.
That's
low for a tech company.
It's low for a tech company. It's low for the FANGs. When you look at Apple, it's trading around 30, 31. So and Microsoft as well. So this is still stupid cheap.
What's Meta Platforms at? I feel like they're probably under 32, right? 30.
Yeah, well. I think they're like 24. I want to say,
because I feel like they've been cheap for a while.
The P, 23. It's 23.8.
Yeah.
So yeah, 24. Damn, I was close. So those are still stupid cheap. And I don't know. I just think that they're going to be crazy buys at some point.
Yeah.
Maybe today was a day. I mean, Meta Platforms had a really great day. It was up 2.5%. I think that these are going to be buys. And that's why I decided to take a little bit of nibble on Salesforce, ticker symbol CRM. Same type of deal, right? It's a S&P 500 company. They make money. They do really well. The growth is still there too. So it's not like I'm not saying don't be in growth. I think there's just stuff that's just really gotten ahead of itself. And you can name a ton of them, right? DocuSign, CrowdStrike, which has got something stupid like 200 and some PE. So the multiple is crazy high, even though we love those companies. Like I love CrowdStrike. I think it's still worth owning. It's just got to pull back a little bit and correct. But you look at Salesforce, and this even still has a high PE. I want to say this is still pretty expensive from that perspective. Yeah, 48. So it's still on the high side. But I think that it's come down enough to where I think it's at reasonable areas where it looks, on the cheaper side to me. This has come down from $311 highs, and now it's trading around 229. I decided to take a chance on it today. If it comes down a little bit lower, I think that's when I'll start to add a little bit more. Yeah. But I think the theme today was let's just nibble off a little bit and see where it goes, and then if it starts to move in the right direction, you know what to do.
Yeah, absolutely. As an aside, because I was just thinking about CRM and their partnerships, Salesforce and their partnerships, and it made me think about other partnerships. I don't know if you're aware of this. Do you remember last night when Jared said something about Fresca?
Yeah.
It's funny because Coke just announced that they're creating a hard soda with Fresca. They announced that today. Yeah. Yeah. I think it was ironic. Like literally the day after he makes a joke about that.
Yeah.
And I'll tell you what, I'm buying
Coke.
Coke. But I think that's like, Hopefully they can execute it better than Topo Chico, because everything we're hearing is Topo Chico, they laid an egg with the flavorings.
I know, man.
I haven't tried it, but that's the word. Which sucks, because that was like such an easy execution. So that'll be a little bit worrisome. And that Fresca is direct response to Sam Adams and their partners, or Boston Beer and their partnership with Pepsi in their Hard Mountain Dew, which we'll see how they execute that. But that's another one where like, that's a huge opportunity for them to crush it.
Yeah.
And you know, these little kids are going to be drinking their daddy's Hard Mountain Dew.
That's for sure going to happen. We're going to hear stories about that.
Yeah. I do want to talk about a specific ticker, because I'm like anxious on whether I should get in or not.
What you got?
I really want to jump into Tesla again.
Okay. Let's talk about it. Why?
Well, so one, I just like having exposure to Tesla because they are the best. My short-term thesis right now, you can see it's sitting right around the 50-day moving average. It basically gave back all its gains from their delivery numbers. So going into their earnings, I feel like this is a great opportunity to go in. And I just find it highly unlikely that it'll be below $1,000 at their earnings.
Isn't it crazy how we talk about setting resistances and supports and they come and actually meet them? You know, we talked about this $1,200 resistance that on Stockwatch Sunday, this past Sunday, when those numbers came out, we said that, you know, this resistance could be at 1,200. Sure enough, it came up there, got rejected immediately. Now, obviously, there were other things at play here because of the Fed meeting and everything, but it's just crazy to me to see that it came up here, got rejected. And, you know, this is going to be an area to certainly watch for if we get a bounce out of Tesla. Now, again, as a reminder, we've talked about how Tesla historically does really well after, you know, they come in with strong sales leading into earnings. The earnings are what, Fat Man Zoom, February 2nd?
Shit, I wish I knew. I'll tell you.
I think it's
that
February.
Sounds right, though.
I think it's like the very first week in February.
Okay.
But anyways, end of January, beginning of February. So leading up to that date, I think we do see a potential.
January 25th.
Okay, January 25th. So we'll see a potential move back up in there. I think that we do see some sort of something along those lines of the average of the 15% gains going into those earnings. Obviously, there's a lot of other things at play, but I would imagine that because of those sales numbers, there's a lot of people excited about the potential earnings and what they look like.
So you're giving me permission to buy Tesla?
Yes.
Should I go all in?
No.
Oh, damn.
I will say it's encouraging that even though it spiked below the 50-day, it came back and kind of like rested there.
Yeah. Yeah. And we've seen this volatility, boy. This puppy moves.
Yeah.
This moves like butter.
Yeah.
Both ways, unfortunately.
It's a crazy looking chart.
Yeah, it is. It is wild. And fun fact, since we're on Tesla, you probably already know this, but I just found this out from Twitter. Elon was born 69 days after April 20th.
Is that a fact?
I believe it. I believe it. I don't know why I believe it, but I just do.
On that.
Really?
I call bullshit on that.
We can easily figure that out.
We could.
You guys can tell us.
Yeah.
You guys can let us know. James Harrison says, looking to add to NVIDIA, what would you say is a good price? I have a small position at 276.
Good question. Let's take a look at this. So NVIDIA has come down a lot. I think the semiconductors do continue to do really well going into the rest of the year. I don't know what your time frame is on this, but I think that if you are looking at NVIDIA, it's really challenging because if it doesn't hold this area at 270, now granted, it came down and bounced up and closed around 281. So I think that we're almost in safe territory. I don't want to say that we're completely safe, but it was encouraging to see that it actually held up that support line. So let's go ahead and just mark that so you guys have a visual on what that looks like there. So you can see this, right? I mean, it gapped up here back in November. So that kind of identified there as a potential support. It came down there, touched it again on December 20th. And then now we're revisiting those levels today, and it held. So I think that that's really encouraging. I would say that right around here could be a potential area that I would buy NVIDIA. I think it's at a reasonable level, but just keep in mind that if it breaks below this, there's not much holding it up as far as support's concerned until you get all the way down to 230. Now, this isn't me saying that it's going to go down that far, but the potential is certainly there if it doesn't hold the support at $270.
I agree with you. And I have share. I bought Tesla.
Thanks for that. Oh, you bought Tesla?
I'm in.
Okay.
Right. Julian says, look into Baba. What are you talking about? We've been looking into Baba.
Yeah.
Oof.
We had a whole piece on it yesterday.
Although
There's a whole bit.
I don't know, guys. I don't know.
What?
Looks good.
Yeah.
Looks like it's trying to get a little life in it.
Maybe till G comes in.
$150. I'll breathe easy. But I'm still feeling good. Yeah, we talked about Charlie Munger doubling down again on his investment. Yeah. He doesn't care what you Chaos Crew say. He's in. He doesn't give a shit. Michael Hanna sold Intel, IBM, Apple, and bought some of that dips. Bought Affirm, SoFi, Toast, Matterport, Square, Unity, Baba. Damn.
Literally, hold on. Pause.
Yeah.
Literally all the things I said to stay away from.
Yeah.
Michael Hanna bought today.
Michael, weren't you the one who said you freed up a bunch of cash and basically used it all in like the day? Wasn't that? He's like, I used most of it.
To be clear, we love you, Michael.
Yeah.
I know you hang out in Discord all the time. That's cool. But man, what the hell are you thinking?
I got no issues. You do what you do, man. You do what you do.
I hope you're right. I hope it goes crazy, but I don't know. I would have rather been hanging in Intel, IBM.
Yeah.
Rather, especially like Affirm is definitely a dangerous one to be in. SoFi, okay, I can get that. Matterport, if you want to keep a little bit more speculative stocks in there, I'm not mad at that one, but but they also operated at a loss, so it might be ugly. But I probably would have just stayed put if I was you. But hey, whatever.
And if a couple of those go off, those can really, really go off.
Yeah.
So we'll see. This earnings season is going to be crazy. I can't
wait.
You talk about like a firm. It's either this earnings or next earnings. A firm's going to have to show something.
Yes.
If they show great revenue, this thing will go to the moon. There's just going to be some crazy, crazy headlines and storylines. This earnings and definitely next earnings. So I'm excited, man. It's going to be the Wild West out there.
It is, because Affirm is very interesting. It's down 50% almost from its highs. And, obviously you could be just like, well, this has come down so far. The risk reward is quite good. And I would agree with you, Mike. I would agree with you. But man, just hang on for the ride. I hope you got a seatbelt on some of those that you bought, because it's going to be crazy.
Oliver Thorpe says, I'm curious about Affirm, but do worry about competition in the space. I can't say that I worry about competition in the space, if I'm being honest.
Me either. Yeah.
Because I feel like they're getting to a point where their partnerships are going to create that moat that a lot of people talk about with a company. Like Amazon's not going to just jump from competitor to competitor. Shopify's not going to jump against competitor to competitor. They do their due diligence, and then they largely are going to stay put in the partnership. So I think that actually is going to create the advantage. And the question just is, do people keep using it? Which I think the answer is going to be unequivocally yes.
Yeah. I think so too. And I'm actually, that's what I'm excited about Affirm. If you guys remember, like, we were very big bulls on Affirm when they announced partnerships with Apple and Canada, and then also with Amazon. They have big partnerships, which is great. I think the growth here is extraordinary. Yeah. It's just the rate hikes obviously would affect the stock. So just because it's a good company doesn't mean that it's going to be a good stock, and that's kind of the angle that I'm taking this at. So I think Affirm is worth owning as long as you are long-term greedy. But if you're expecting some sort of short-term monster move, I'm not sure that's necessarily on the horizon. I don't know when we see 176 again, but I don't think it's going to be this quarter or maybe even the next.
Tim says, Kramer says Affirm is turning out to be buy now, don't pay later. That and competition might be good reasons to stay away.
That's a fair point.
Yeah. Julian asks, will rate hikes impact Affirm and other financial companies? Which you just mentioned that yes, they will impact Affirm, but will they impact other financial companies?
No. Yes, but in a good way. So like a firm, the difference between a firm and other financial companies is that a firm's not making any money, right? They're a fintech company that are still reporting losses. So if we look at something like a firm or like a Robinhood, for example, that thing's been hammered too. 52-week low after 52-week low every single day. Why? Because people are worried about getting in stocks that report losses. The growth is going to be slowed down as interest rates go up. So, and we know that Robinhood's got some debt on their hands, and a firm does too. So those are going to be the ones that suffer. Other financial institutions like Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley, JP Morgan, all those big banks that have tons of cash on hand, and they're actually using it to buy their shares back. They got so much of it. Those are going to continue to do well because interest rates going up allows them to charge more for loans that they're going to be giving out to smaller companies. So I think that yes, they're going to be impacted just in different ways. And it's going to be important to know the difference.
Yeah. All right.
Good stuff.
As we wind down, guys, hit that thumbs up button, support the content. If you like what we're talking about, if you like what we're putting down, definitely hit that thumbs up. Remember, we go live every Monday through Thursday at 3:30 p.m. Eastern time. Our next show, though, will be Stock Watch Sunday, where we go live on Sunday at 7:30 p.m. Eastern time. And we talk about what we're expecting from the upcoming week for the market. And Brad brings 5 stocks that he's watching for that week. It's our flagship content. It's the most fun we have all week, in my opinion. So make sure you guys hit that subscribe button, click that notification bell to get notified when we get live. And I think that's it, man. I'll see you guys in Chicago.
Yeah, it's going to be so awesome. One other quick thing. If you guys don't mind going to ownthechaos.com, hit that link down in the description below. We also put out a watch list every single day of the week before the market opens, give you a snapshot of what we think might move throughout that day and maybe even throughout that week as well. Go to ownthechaos.com. We'd love to have you guys support as well over there. And we will see you Sunday.
Bye.
Bye. Oh, hey, by the way, where's Freddie?
Recovering from COVID.
Oh, shit. Yeah. T's and P's for Freddie. Maybe he'll be back next week. Okay, bye.
Yeah. Bye.